everybody. This is Getting Real Estate in Vegas, and I am Bridget Magnus. You are watching the Vegas Video Network. If you have questions, problems, or suggestions, go ahead and get those into our hands. You can email us at gettingreal@vegasvideonetwork.com. You can also get to us on our toll-free chat line. That's 866-966-4599. Or, since you're watching us right now anyway, why not go ahead and join us on the live chat and get your questions in right away. We would like to thank those of you watching on the Vegas Video Network, but we'd also like to give a shout out to those of you who are watching on iTunes, those on YouTube, Roku, and those of you who are listening on the radio to KSHP 1400 AM on Friday evenings between 6 and 10 o'clock. Well, it has been a fabulous, gorgeous week with lovely weather here in Vegas, but we're not here to talk about the weather. We're here to talk about real estate. So let's get on with the Friday figures. All right, here we go. As of this morning in our local MLS system, we had 13,218 available listings. That is down 21%. Yes, that's down 21% from last year. I was having trouble deciphering my own notes, sorry. The median price on single-family homes is $138,000, which is down 10% from last year. Median price on condos is $55,000, and median price on townhomes is about $80,000. Of the total, we do have 2,739 foreclosed properties. That is down about 1% from last year. The median price on those is roughly $107,000. I'm very happy it's staying at that level. Short sales, 6,057 of them right now. That's down 22% from last year, and that's something I'm happy about. The price on those, median $110K. We also have 4,424 non-distressed classic sales. That's down 13% from last year, and the median price on those is roughly $180,000. In the last 30 days, we have closed 3,952 properties. That is up 15% from last year and puts us on track for a top 5 all-time year here in Las Vegas. The median sales price and median list price are both $110,000. Be sure to consult with your buyer's agent about what's going on in the neighborhood you're trying to put in an offer on, so that you don't try to put in an offer that's going to be way lower than what the seller is going to expect. The median sales price is down 18% from last year, but that doesn't mean that we can go ahead and lowball things. We also have 13,383 properties under contract to be purchased, up a whole 2% from last year. Rentals, 5,432 available, 2,444 new leases. Median rent on both, $1,100. I don't know why I look it up anymore. It's always going to be $1,100 to $1,150. It's very stable, and I think that's a great thing. So let's move on to some news, shall we? Existing home sales, we had some figures come out this week. They were down month over month in September, but up year over year. So on balance, a very good thing. MERS, that's the Mortgage Electronic Registry System, been in a lot of trouble, and the latest one is a lawsuit in Ohio for failing to record documents properly. The interesting thing about this one is that the list of defendants reads like a who's who of big banks. So this is definitely going to be worth watching. Watch to see what happens with this versus the 50-state foreclosure fraud settlement. See who wins in that race. One more piece of great news, there is anecdotal evidence that banks are approving more short sales. Yay! Okay, so then let's kind of talk for a little bit, some stuff for buyers. Sellers, hang on, there's going to be stuff for you later, but we're going to talk to buyers for a few minutes first. Let's talk about why mortgage applications get declined. Well, why? First thing is income. Yeah, I'm afraid so. Sometimes it is too low, it can't be checked out, too little time at your new job, change of field, say that you went from food service to being a bank teller. They're going to kind of take a look at that and say, are they going to stay in that job very long? I don't know. A recent change from being an employee to a contractor. Now, unfortunately, this one is way, way, way too common in our society today. You lose your job, you end up doing similar work, but as a contractor, that's going to hurt your chances of getting a new mortgage, unfortunately. Also, sometimes there's too much unpredictable income. What do I mean by that? I mean getting paid in cash, having a lot of overtime, getting a lot of bonuses, getting rental income. These are things that mortgage companies are going to look at and say, how likely is that going to be to continue? Can he count on getting a $10,000 bonus next year like he got this year? Can he really count on working 50 hours a week forever? I don't know. Now, the next big reason that mortgage applications get declined, and this shouldn't be a big shock to anybody, would be debt. Yeah, sometimes we owe too much money, don't we? Sometimes we also are paying too much each month on our debts. When you add up your car payment, your credit card payments, your student loans, your Best Buy charge, all of these little things add up. And if it adds up to too much of your income, the nice people who are approving your mortgage application are going to say, no, too much of that money goes to other sources. We don't know that there's going to be enough left over for us at the end. The next biggie, another thing that shouldn't shock you too much, is the credit score. Is your credit score under 620? Forget it. You're not getting a mortgage. I don't know of anybody who is lending in that credit score range. Also, if you've got late payments on your current mortgage or rent, a short sale, bankruptcy, or foreclosure in the last 2 years, you are going to have an extremely challenging time getting a mortgage. I'm not going to say it's impossible. I'm going to say it's extremely challenging because you never know. There are some weird things going on in this world and new programs getting announced every day, and it's hard to keep track of all of them. So the next biggie is not being able to verify information. You can't verify your income, or even more common, you're telling the mortgage company that you make, let's say, $1,500 a month, and they call your human resources department and they say you only make $1,200 a month. Oh, that is a big red flag with, red flashing lights on top of it. Banks don't like to hear about this, and you're not going to get that mortgage if the numbers aren't at least close when they talk to your HR department. Now, the next one is a sad but true. Things change. Sadly, there are people that lose their job. Not so sadly, there are people who go ahead, they've got their mortgage paperwork in hand, they know they're closing on their new place in 2 weeks, so what do? They open new credit accounts. After all, they've got to go buy appliances for the house. Don't do this. Basically, the bank is lending you money under the assumption that things are going to remain more or less the same. Do not open those credit accounts until after you have closed on the new house. Other substantial changes to your debt or your income are things that could cause your mortgage to go bye-bye, and nobody wants that to happen. Now, the last one is unfortunately one that you, the buyer, have no control over whatsoever, and that is the appraisal. There are two major things that can happen with the appraisal. The first is that it can come in low. Say you've purchased a house, you've contracted to buy it for $125,000, and the appraisal says it's only worth $100,000. Well, the bank is only going to lend you the money to buy it at $100,000. Your choices are to bring more money to closing, get the seller to renegotiate the price, come to some compromise between those positions, or walk away. It is sad but true, and your agent will give you more guidance on that if you are unfortunate enough to end up in this situation. The other thing that can happen, and oh goodness gracious, I see this happen all the time, sometimes the results of the appraisal are going to require too much in the way of repairs. They will require any broken windows be fixed. It's just the way things are. If there are doors that need to be fixed, missing appliances, a bad roof, electrical issues, anything that could impact safety, such as smoke detectors, are something that most appraisers are going to be picky about. And so you do need to pay attention to that when you're looking at the house, particularly if the house is being sold as is. We're going to talk more about the flip side of that equation a little later in the show. But in the meantime, I'd just like to talk about what were they thinking? All right, well, when you're buying a certain level of property, you expect that property to have certain amenities. If you are buying a home that costs $1 million, you expect it to not have laminate countertops. If you are buying a high-rise condo, you expect that community to have certain amenities such as, you know, weight rooms and security guards downstairs to keep the little people out. You know, those 99%ers, we don't want them coming up to your suite, right? Well, sometimes these higher-end homes have little features like this one. This is clearly for the man who just can't afford to get away from it all, not even for a few minutes. Sanitize that regularly, okay? We will be back after a break for station identification. Don't go anywhere.
Traditional media believes that after about 3 minutes, you'll tune out. Most Vegas media companies think if it doesn't jiggle, you won't tune in. At the Vegas Video Network, we think both are wrong. The Vegas Video Network is the first and only live online broadcast network that specializes in insider news and expert views about Vegas. We combine great storytelling with the ability to watch when and where you want on your computer, mobile device, or television. Discover the real Las Vegas. Visit VegasVideoNetwork.com.
And welcome back. We did have a question come in during our break that I'd like to quickly address. Someone would like to know if there are ways to get a home loan outside of the banks and mortgage brokers. And the short answer is yes, there is. There's something called hard money that is generally available to investors. They are usually relatively short-term loans with relatively high interest rates, and they are certainly not designed for Joe Average, who is going to be purchasing a home to live in for 30 years. But it is true that it is out there, and I thought I should mention it. So then, real advice. Let's talk about selling a home that has some defects. Now, no property is perfect. I'd just like to acknowledge that up front. Any home that you could possibly consider buying or selling is going to have something wrong with it. None of them are perfect, not even brand new homes. There's always something that could stand to be fixed. Some of those problems are bigger than others, though, and if you are the seller, there are some things I need you to be aware of. The number one, a top thing, and if there was only one thing I can say about it, it's going to be this. Never, ever try to hide problems with your property. Someone will find out. They might find out during the inspection and use it as a reason to walk away. They might not find it until after it closes, but that's going to open you up to lawsuits. Disclosure of defects is required by law. So just remember that. It's really important. So what are you going to do? Well, the thing I would consider is consider a home inspection before you list. That way you're going to know about all of the problems that are likely to be found, and you can make this available to potential buyers and say, hey, look, I already did the property inspection. This is what's wrong. Hey. If you can, I do recommend that you go ahead and make repairs. You will need to document what was fixed, when, and by whom, especially if there are permits that need to be drawn or there might be work that's done under warranty. Things like water heaters, for example, at least here in Las Vegas, there is a permit associated with that, so it is not really the sort of thing that you want to be doing on your own. because somebody is going to have to inspect that and make sure it was done properly. Why not make that the plumber's responsibility instead of yours? So another thing you might consider is throwing in a home warranty up front. Some vendors do have what they call seller's coverage to fix things that break during the listing period. And unfortunately, they're not going to fix things that are already wrong, but they will fix things that break, and they will also cover the buyer for a year after closing. It's a nice perk. It's a nice way to set your listing apart from others and say, hey, this is something you're not going to have to worry about. It's already taken care of. Another serious thing to consider, and I think this is what most people try to do these days, is to sell the property as is. Disclose everything, but tell them that you're not going to make any repairs. This is the way it is. You don't like it, don't buy it, because this is the way it's going to be. Another strategy, and you can use this in conjunction with the other things, is go ahead and pick your price to account for the repairs that have to be made. Say your place needs $20,000 in repairs. Go ahead and price that property $20,000 or even $25,000 below market. Sure, your neighbors are going to hate you because you are bringing down property values locally, but the buyer is going to think that's fair. And if your goal is to go ahead and sell the property, this is something you should seriously consider. Another thing you can do is you can offer a credit for repairs. You might have seen listings that say carpet allowance, paint allowance. This is the sort of thing we're talking about. Go ahead, offer a credit to cover most of the cost of whatever repair has to be done. Be sure that you have an addendum to the purchase offer that reflects this. And keep in mind that there may be some limitations on what you can do with this based on the lender that's involved that's helping your buyer. And this last thing is another real important one, and I touched on it a little bit earlier. Remember that the lender may require some repairs before closing, even if you are selling it as is. As I mentioned earlier, these are mostly things that have to do with safety. The one that I've seen most often brought up is windows. If you have broken windows, just plan on replacing those, because you're not going to get a mortgage company to sign off on a property that's got broken windows or no smoke detectors, things of that nature. If you have an unsafe condition, just go ahead and fix it and don't even try to get it past a lender. This is especially true if your buyer is using FHA or VA financing. So consider whether or not you want to consider accepting those finance offers. Another thing is that if the property is in sufficiently bad condition, you may want to consider offering it for sale as is, cash only, because that way you bypass the entire problem of a mortgage company saying, oh yes, but this has to be fixed, that has to be fixed, the other thing has to be fixed. No, it's sold as is. If you don't have a mortgage company, that's something you don't have to worry about. All right, I'd like to thank everybody for joining me today. It's been a terrific day, and you're going to join us again next week, right? If you have an email, if you have a question or a problem in the meantime, send it to us by email. That's gettingreal@vegasvideonetwork.com. You can also leave us a message on our toll-free hotline. That's 866-966-4599. Thanks again to all the nice people watching us all over the place. If you have a personal real estate problem that I can help you with, go ahead and look up my information at bridgetmagnus.com and drive safely this weekend.